The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Hope everybody's doing well today. We got a little bit of action going in the markets due to the jobs report, which they'll probably come out and make a change in it next month, but who knows, who cares? Anyway, we started the program today looking at the DAX index. As you can see, we had a big explosive move following what we did here in the United States. And as you can see, we're almost ready to make a 1.618 expansion on the daily. That'll probably come in, I would imagine, early in the week. I'll cover some of the stock indices stuff just a little bit later because we did hit a few things last night and early this morning that, should be looked at anyway, if nothing else. But the main thing I wanted to do this morning was to talk just a little bit about, volatility and what are the best things to trade for your buck. But before we get into that, I wanted to mention Tom O'Brien was on talking about the bond market, this case that's going on in the legal system about bond pricing and stuff like that. Folks, back in the 1970s when Milken had the idea of changing junk bonds to high yield bonds, this was the thing to do. He was known as a junk bond king because only Drexel Burnham started this back in 1974, right after he got out of school in Philadelphia at the Wharton Institute. He had this idea. He took it to Wall Street, and Drexel wanted to do it. He transferred to California and began selling junk bonds, which he changed the name to high yield bonds. And the reason why it was a perfect setup was the fact that we had interest rates that were going nuts. If you remember in the 70s, we had T-bills one time during 1980. They hit 13% in a 3-month T-bill. It was nothing to see Treasury bonds, Class A Treasury bonds trading at 16% and munis trading at 18%. So people couldn't get financing to start companies, so they did it through junk bonds. Well, the way it worked was they were the market both sides, either buyers or sellers. So if you had a junk bond to sell and you came to Drexel to sell the bond, the story that they usually give you would be, boy, the market's really soft. We'll have to mark that down a little bit to get in. And on a bond, usually they made about a point or two, which is not very much. But with Drexel, with the bonds, they were making 20, 30, 40, 50 points on each bond. In other words, if you wanted to be a buyer, you had to pay way up for it. And if you wanted to be a seller, you had to mark it down. And they did this for years. And this is how Milken made his big fortune. I believe it was 1978. He made more money than the McDonald's Corporation, which was $550 million. And that's equivalent to about $5 billion in terms today. But that's how it happened. It would have still been going on to this day, I believe, if they hadn't gotten greedy and started doing, things that were illegal, like insider trading and information and stuff like that. And that's what brought Drexel down. But that's the story. Now, it's a lot different because we have electronic trading, the NASDAQ. And when I first started trading, the bid was a quarter, the offer was a half. So it was quarter, half, 3/4, 1, quarter, half, 3/4, 1. Now we're trading in pennies. And so it's very easy, to put your trades on. You're just like a floor trader. You can see pretty much the volume that's going on. And you'll be able to, execute the trades, any way that you want to. Since we're talking about trading a little bit before we get into some of these markets, I wanted to show you just a little. First of all, I'm going to cover this one more time, and then hopefully we can put it to sleep. This is the chart for Bitcoin. As you can see, it had that 35% drop over a 2-day period. We now rallied back 61%. Folks, I know nothing about this. I have no interest in it. But remember, I'm the person that didn't believe in color televisions, and I'm still not sure about microwave ovens. So I am going to wait on the Bitcoin. There's too many other fun things in the world to trade, so I'm not going to work about it. But it does trade technically very well. There's no question about it. The one thing I would highly recommend you not do is to go to one of these Bitcoin sites, just like I did right here, and get a price, because what happens is then they have your email, and you're going to get hit with everything about cryptocurrency from Shanghai or Singapore or Dubai. You're just going to get a lot of those, and that's not fun. So you have to block that out. So I recommend you pass on that till it gets a little bit better. But remember, back when I was a kid and electricity had just come out, I really thought it had a chance to make it. But Bitcoin, I'm not really sure about it. Let's get to the markets here for just a second, because I would like to show you a little bit of something that most people don't understand and believe and ever talk about it, and that is the use of margin. Let's just put this chart up. What I've done here is to pull up just the major things of crude oil, gold, the S&P, Treasury bonds, and Euro currencies. As you'll see there, the day trade margin on crude oil is $742. The overnight margin is $29.70. If you go down to the E-mini S&P, you'll see the day trade margin is $12.65, and the overnight margin is $5,000. Folks, just think about it for a second. Crude oil today, just since the session to where we are right now, has moved more than $1,500, actually closer to $1,800 in just this short period of time. Look at the S&P. It's barely moved $300. I mean, you can see the difference in the volatility that you get, more bangs for your buck what you get with crude oil. The same thing is true as gold. Gold has moved $17 this morning. And, and if you stop and think, the amount of money that you have to put up versus the amount of liquidity and volatility that you get, it's much better to trade crude oil, gold, treasury bonds, and also the euro currency, and just forget about the E-mini S&P, because it has less volatility than anything else. Now, that'll change, but right now at the present time, the best thing to trade are crude oil, gold, treasury bonds, and euro currency. That gives you more bang for the bucks. Look at the day trade margins you have to put up. Now, margins are a two-edged sword. It's leverage, and if you're wrong, you're going to get tagged. But if you learn how to manage your money and keep your stops, relatively sane, not like $1,000 or anything like that, you can trade within these limits on these things, and it makes it a whole lot easier than doing some of these things looking at. And we've had a pretty good move here. I wanted to bring this up this morning because I was on a show from the UK early this morning while everybody was sleeping. I wanted to show you this chart. This is the chart of gold. And all I was trying to do is, this is some of the things that I covered when I was over there last week, is how the markets moves in repetition. And you'll see that moves in usually between $17 and $20, the harmonic number. You'll notice the trend is up because we have higher bottoms all the way. And now we've already gone up and made a new high on this after making this number that we had at 17 down here last night. Now, that doesn't happen all the time, but that just shows you how you use some of these numbers. One of the things that I learned while I was in the UK is how these numbers relate to sacred geometry and the numbers in the Bible. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, they're having a little discussion in the Tiger Den today among the traders that are in there, and there's some pretty sharp dudes and dudettes that are in the Tiger Den. And if you want to join www.tfnn, I highly suggest you take advantage of it. But the discussion that they're talking about is the fact that most traders that trade futures lose money. Folks, that's true of, people that trade stocks and also people that trade options. But options, unless you learn how to be an option seller, is even more biased. But the people that stick with it over a long period of time will do well. Now, the reason why I have some information about this is when I first met my good friend, actually one of my very best friends, Mark Douglas, who passed away a year and a half ago. He was working with Merrill Lynch, going over thousands of account statements of these traders that they had. And he had realized when he went through all these, 15% of the traders made all the money. The other 85% lost. What would happen, people would open an account for a while, lose the money, and then they can go in and do it without, they would just quit and not do it anymore. By the way, if you want to come into the Tiger Den, you can come in and try the den absolutely free, which is really a lot of fun. It's just go to www.tfnn and you'll get some, better information on it. However, Mark went far deeper than that as he interviewed the positive traders, and he also interviewed some of the negative traders, but the main ones was the positive. He wanted to see what their difference was than what the people that lost money. The two key things is the people that made money did two things that the small trader did not do. One is they were always worried about how much money they were going to lose. They focused on how much money they were going to lose, not focus on how much money they were going to win. That was the one of the main things that they did. The second thing is that the people that were very successful traded far, far less than the people that lost money. In other words, people by over trading we're losing more money. And stop to think of it. It's real simple, because if they're losing and they're trading more, they're losing faster. I mean, you don't have to be a rocket science to figure that out. So those were two of the main things. There were other things too, and this is why he came out with his first book called The Disciplined Trader. Later, the book Trading in the Zone. So all of those, and he's got a new book out that is really knock your socks off. If you have an interest in that, you should get in touch with Paula at markdouglas.com. Anyway, those are the main things when you're trading, is you have to learn to do it. The old Chinese adage is, the wise man learns from his mistakes. The smart man learns from his mistakes. The wise man learns from the mistakes of others. So that's the main thing that you want to try to do. Now, I'm going to put a chart up that was given to us by one of our den members that shows the consumer sentiment. And if you look at this chart from going back to 1978, this is a really long term. This is a classic head and shoulders pattern, folks. I mean, it's just about as classic as you could possibly get. If you look at the left shoulder in 1985, and if you look at the head in 1998, making that little slightly higher high, that was the one that we made in March of 2000 when the NASDAQ went and made new highs, but we did not do that in the Dow and the S&P. And then here we are in 2000 at the same. So this is it's a long-term thing. It's not making a forecast. It's just showing the pattern on a long-term pattern, and that's really all you're really looking at. So let's take a quick look here at what we're watching here this morning in some of these indices, and then I wanted to spend just a tiny bit of time talking about intermarket relationships, especially what we're watching in crude oil right now. But we'll take a look here first at the Dow E-mini. And if you'll notice here, this is a daily chart. The high that we were forecasting on this was been at Dow 21,200. The high was 21,202 or 208, I believe. Backed off a little bit because of that jobs report, but it's still nothing. It doesn't really mean very much at that time. And then also the other one that we had was the Dow E-mini NASDAQ that we take a look at here. You'll see here that the Dow E-mini NASDAQ went up and made that 1.618 retracement, also 1.27 off of the smaller swing, and that came in at 58,000, maybe a little later, 58.44. And that was pretty much spot on. They backed off a little bit from there, but it really is not very much. If this were a full moon or a new moon day, I would certainly be interested in maybe taking a look at it from the short side. But it's very, very strong. The risk here is really minimal, because if we get above those numbers that I just talked about, which in the I've got to do the S&P too. Sorry, folks. Just give me one more. I want to do this S&P one here. I've got it here. Where are you, S&P? Where are you, S&P? I even wrote it up. Here you are, hidden over here in the corner. Just a second here. There we go. We'll get this up and take a look at it here. You'll see this is the one I posted real early this morning when I was doing a little interview in the UK. You'll notice that those two 1.618 expansions came in at 24.37. That was the high so far. We backed off 7 points, which isn't very much. But that completes the ABCD, and it also completes those two ratio. Now, whether that is going to mean very much, I don't know. But it's a Friday. It's also the 2nd of June. That's the end of the bias. In other words, the bias for stocks is very positive from the last 2 days of the month, which would have been the 29th and 30th, or the other one would have been at the level of can't do anything about that, folks. Just bear with me a second. But anyway, both of those numbers came in at the same time, and we want to watch that level of 24.37 very, very closely here in the S&P, because we close above that, we're looking at much more higher levels. But the funds and I don't know how many mutual funds they got left, considering everybody's doing ETFs these days, that it's really difficult to determine what we're going to do. I wanted to bring up the NASDAQ E-mini. Also, the other one was the composite. I wanted to bring the NASDAQ up to show you this. and we'll be able to look at it. Yeah, that was Janet Yellen calling. She wanted some information about one of the folks in the den that's a very large trader, how much money they're making, but I didn't have any information on that, so I was not able to help her. But we'll watch it very, very closely as we go through some of these things here. Okay, I usually turn that phone off, but I have to leave it on because of the internet connection. Yep, she's after Mr. Z. You got that right, Duffy. Well, we like to pick on Mr. Z because he does such great work in here, and boy, oh boy, it was really fun to watch some of the trades that he does. He's been long some Minneapolis wheat, and that's going pretty much crazy. And then he had some gold and silver this morning that have worked really well. So that's the main thing. Okay, now we want to get on to a couple other things. We've got a break coming up here. By the way, we're going to have Norm Winsky on June the 8th. That's next Thursday. And I hope to have Bill Meridian on either Monday or Tuesday of next week. So we'll get back to our usual gang of thieves when we get back next week to get some of these guests back on. We'll also have Rich Anderson on also. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been asked to take a look on the stock of ExxonMobil. This used to be the biggest stock in the stable of just about everybody, but with the fact that we've got Google almost ready to hit 1,000, and Amazon's already hit 1,000, and Apple is probably well on its way. Since it split 10 for 1, it's probably around 1,500 anyway. But those have taken the place as far as value, but Exxon is still a big player. If you'll look at this Exxon chart, it's much weaker than the market. As you can see, we've been setting right at this Fibonacci level for well over 5.5 months. That's around 80 bucks. I believe it's trading pretty much close to that right now. You'll notice that we do have a little 3 drive to a bottom pattern that is forming here. Now, the $64 question is it ever going to rally? And we don't know. The reason why I'm showing you this chart is that you could be right on a chart, and if it's not going to go up, the rest of the market could go up without you. Remember, it is a stock market. It's a market for stocks. It's not just one, it's a whole bunch. And that's why you've got one of the key Dow stocks here. ExxonMobil has been lagging very badly. If this were making new highs, this would put another several hundred points onto the Dow without too much trouble. Now, the question that the person asked me, and it's a very difficult one to answer, and that is, what is the relationship between the ExxonMobil and the crude oil? So what I try to do is I'll put up the chart here to take a look at ExxonMobil, and you'll see that the blue line that you see there is the price of crude oil. And you'll see there is some correlation, but if you look at the period between December and February, when crude oil was continuing to go higher, ExxonMobil was falling badly. This was telling you that the stock was incredibly weak. Even higher oil prices couldn't get the stock higher. And now you'll notice during the last about the last 2 weeks, there's been a better correlation on this than ever before. Well, at least since in recent times, these last 2 weeks. Now, if that's enough to get you to enter the trade, buy it there, I don't know. All I know is it's got a lot of support at around 80 bucks. Anything below 9, you probably don't want to own it. But this is what ExxonMobil looks like from a relationship to the stock as it relates to crude oil. The correlation is pretty good, but there are times, as you can see, during that December to February period where it just doesn't work very well. And I don't believe you can trade Exxon by looking at crude oil. I think you should trade Exxon by just looking at the price of Exxon, and that's the main thing that you want to be watching. Now, I wanted to get back to the crude oil a little bit here because it's such an interesting level that we have going on here in crude right now. Let me get the chart up here so we can take a look at it. Here's where we are. This is a 4-hour chart. Let me get it up here, boys and girls, so we can take a look at it together. You'll see here, this is a 4-hour chart on crude oil going back over the last 6 weeks. That gives you, plenty of things to look at. As you can see here, on the 23rd of May, we rallied up and we made a 78% retracement from a high that we had in early April. And then last night, you'll notice that we had several ABCD patterns coming in around the 46.70 level. Our low was 46.79, I believe. We rallied just a little bit since that time. In fact, we've rallied. Just since we've been on the air, folks, we've rallied about $1,500 from up and down. Stop and think. That's a 30-point move in the S&P, and we haven't seen anything like that. So you notice that the crude oil is giving you more bangs for your buck. The key is what you have to do is to match up what your risk is going to be on the trade. Not how much money you're going to make, but how much you have to risk. So if you're trading a contract that's worth roughly say $47.50, which is $47,500. That's 1,000 barrels times the price of oil. So you got a contract that's roughly 50,000, and it's moving very, very quickly. And they're giving you a margin of only $740 if you're day trading. That's tremendous leverage. If you look at the S&P and you have a contract that's trading for $2,400. And at $50 a point, you're looking at $120,000, and they're charging you a $5,000 margin, which is certainly acceptable. But on a dollar amount, you're getting more bangs for your buck with both crude oil Treasury bonds and gold. I hope you see the difference there, because that's where the players are, and that's where your profit lies. It also could be losses, so you have to protect yourself. But if you match some of the patterns up with some of these ratios, it's interesting. By the way, the 61% retracement that we had today in the crude oil was spot on at that 46.70 level. We also hit that same number in the what do you call that darn thing? Heating oil did exactly the same thing. It looks very interesting to see what's going to happen to some of these things as we start the day here. Okay, we're having the market just bouncing back and forth a little bit. We're about unchanged on the day now in the S&P, but it's still very, very early, so we want to watch it very, very closely. Someone's asked a question about Treasury bonds. Folks, we came out of here much like we thought we would. We had that big base area of resistance at that 53 and change level, and once the report came out, it popped through there very, very quickly, giving it a spot to head for, which I believe is around the 155.20 level in the September bonds, because we've rolled over now from the June to the September contract, and we'll be doing that in about about 10 days. We'll be doing the same thing in the foreign exchange, or the markets for the E-mini and the NASDAQ and the Dow Jones. We'll be rolling those over also. But this is just really, we've had a big move this week. It's Friday. It's starting summertime, as Tom O'Brien mentioned. The days of Monday and Friday will be a little less because people take Monday and Friday off, making it a 5-day weekend for them, and that's not unusual for Wall Street to do that this time of the year. So we've got to keep that in mind, that Mondays and Fridays will be a little bit less volume. This is especially true as we get into July and August on Fridays, because many of these folks head into the Hamptons, and that's what they look for as their retreat back in those areas. We don't go to the Hamptons in Tucson, Arizona. We go probably to Scottsdale or over to Green Valley. That's where the old cowboys are. Okay, let's move on. Someone, I have a note here. Someone asked me a question about rattlesnakes. Well, I've had a couple of rattlesnakes. I've lived there 24 years now. I've had 2 rattlesnakes in my house, one in the front room. You got in through the front door that I'd left open, and the other one was in the garage. You call the snake patrol, 911, they come over, pick it up, and take it out and let it loose. But rattlesnake bites in Arizona are not fatal, folks. It's like a rabid dog bite, and the only time it's fatal is if you have to be debilitated or a toddler or something like that. Then you'll be able to see what is going to be able to see that's correct. Anyway, someone's mentioning about Cave Creek in Phoenix, Arizona. That's a beautiful spa resort up in there for the big hitters. And I think the rooms start at about $500 a night, but it's a really beautiful place with big boulders everywhere. It's just really spectacular. Okay, let's take a little break here. 877-927-6648, and we'll get back to talk a little bit more about some of these markets.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I have a request. During the break here, I noticed my email had popped up 4 different times, people sending me Bitcoin links. Please don't send me any Bitcoin links, folks. Later on, when maybe they're trading on a listed exchange, I'll take a look at it, but right now, it's just not on my radar. I have too much fun trading the ones that we just talked about, gold, silver, crude oil, euro, stuff like that. That's the main thing. So I'm interested in it, but those links just lead to other links, and it causes me a great deal of technical problems that I'm just not aware of. So hold off on the further information on the Bitcoin. As I hear more about it coming on a listed exchange, then I'll take a quick look at it. But I really don't. B, C. A, I don't know anything about it. B, I have no interest in learning anything about it. And C, I don't need it. So I'm just going to pass on it. Anyway, let's move on here and take a look. There's an interesting trading situation showing up at something that I hardly trade, and that is sugar to sweet, world number 11 sugar. As you can see here, we're down exactly at the 78% level as of yesterday, around this 1423 level in sugar. So keep an eye on that if you're interested in sugar. You'll notice here over the last 3 months, we have an ABCD 3 drive to a bottom pattern, also a 1.618 expansion right at the 786. So if there was ever an opportunity for sugar to find some type of a bottom, this might be the place, because you have 3 patterns there, several different ratios. So it's interesting here to take a look at sugar. And it trades relatively well, much better than it did in the old days. And it's also electronic, so you don't have to worry about the brokers. Back in the days when I was trading sugar and cocoa and God forbid, orange juice, those pits were very, very small, and most of the pits were controlled by relatives and siblings. It wasn't like it is nowadays with electronic trading. That's one of the reasons why some of those exchanges got hurt so bad. Crude oil being the really big exception, and also silver, but crude oil was a huge pit, and there were so many people, fighting for, good spots that it was hard to manipulate those markets, whereas in cocoa, coffee, sugar, and cotton, which also is another one that is interesting because it was also run by a lot of families and siblings. But that doesn't work anymore because with electronic trading, you've got to be able to, fill the need for for everybody's trade. So that's the key thing, to take a look at. Now, the July is going to be coming into delivery pretty soon. So if you take a look at October sugar, you'll notice that it is down just a few more pips to make the 78% retracement. So you might have to sit with about a 40-cent loss in this. In other words, the amount of risk that you have to take here would be 40 cents, in my opinion. 40 cents in sugar is $440, which is certainly acceptable. One of the things that we like to look at in the pattern recognition is the amount that you have to risk on anything, and usually it's in the neighborhood of $350 to $500, and that's with the exception of gold, which you have to extend your stops out to about $8, and then also in the crude oil, we've got to give it a little bit more action there because it moves $1,000 very, very quickly and without much help from any news of any kind. So those are the things that you got to keep in mind, that you want to focus on how much money you have to risk and not how much money you have to lose. Now, Paul Tudor Jones, always used to say, winners think how much money I can lose, and losers think how much money I can win. And that is how Las Vegas is geared to the advertisement. They put all these flashing signs and all of these machines and everything to put in your 3/4 and make your $50,000, or buy a keynote ticket and make $250,000, or play a 8-horse parlay and make $200,000. But actually, it doesn't quite work that way, because most of those people actually do. In fact, my grandson is 6 years old, and I bought him this little toy bank, which is like a slot machine, and I taught him that the money goes in, but it doesn't come out. And every time he sees a slot machine on the TV or something, that's the first thing that he says. So he's learned the first lesson of investment, and that is, don't lose too much money. That's the main thing. There's no place on that slot machine does it ever say, I've taken in more than $1.2 million and I've given out. Nowhere on that machine does it say, you have no chance of beating me over a long term. So the only thing that the slot machine good for is when you run out of money, they don't let you play anymore. So that's like your own margin call. So you don't want to, certainly mess with that. But that's the key to, watching some of these things. The big day today for me is the euro, because we've gone up to this really key level that we've been watching for quite some time. That's at this level at the 112.90. We got to 112.80 and change. That equates that number in the dollar index, which is 96.56. I don't know what the low in the dollar index is so far today, but 96.56 is a really key level in the dollar index. And if the dollar index should close below that 96.20 level, that would tell us that the euro is going to go a lot higher and the dollar index is going to go a lot lower. But as we pointed out yesterday, we are looking at a 61% retracement on the weekly charts, with ABCD formations and everything in the dollar index coming in at this 96.50 and change. And I don't know what someone would tell me what the low is in the dollar index. I'd certainly like to see it. I'm unable to get the prices due to my internet connection, but we're very, very close to that, and that's why it's going to be a key thing to look at, over the weekend, because it's going to be spot on at that point. And any move beyond that will take it to a, much, much lower level, i.e. the euro going higher. I don't believe the euro will get much above, 96.66. Thank you very much, Marshall. That's spot on. Can you tell me what the low of the day was? Make me happy, and maybe it's 96.56. We'll see if that's the case. But anyway, we want to watch that one very, very close, because it's very, very interesting to see what's going on, along with those numbers that we posted on the E-mini S&P. It's on the low of the day. Thank you. It's along with the E-mini S&P at that 2437, the Dow E-mini at 21,200, and the NASDAQ E-mini NASDAQ E-mini NASDAQ. That's the 100 that comes in at 5844. So that's the main thing. Yes, I think that the British pound does have a chance to retest that 120 level, but we'll have to be able to see if that is going to going to happen. It's been bearish ever since it got to the 130 level. I think that we were talking about that before I had to leave TFNN for a bit because of medical and travel. But I believe when we got up to that 130 level, that was certainly a strong area to see whether it was going to turn from that level. So those are some of the things that we're watching. The IWM is still lagging the market badly. It did not make new highs during this last run like we did in the NASDAQ and the S&P and the Dow Jones, but that's neither here nor there. We'll see what happens. Those numbers that we saw today are just nothing more than expansion numbers. What's important is that there are several of them. That's the key thing. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone's asked me to take a look at cotton, and I put up the chart of July cotton here. You'll notice that it made a big 3 drive to a top pattern where it went limit up for 2 days and then completely reversed. This is characteristic of cotton does. Usually that's a short squeeze at the very end. You'll notice now that there's a very strong resistance in the 80 to 83 level in cotton, and right now it's trading around 77 and change. So we'll watch this closely. Folks, if there's going to be a big boom in the economy, most of these commodities are going to have to catch up, because that's where how the stuff is, the clothes or whatever, the driving around with your cars, and the food that we eat, all that stuff is going to be looking at what's going on. So, and also the wheat, as we mentioned earlier, Mr. Z told us about the Minneapolis wheat has been moving up quite rapidly today, and I imagine Chicago wheat will follow in a few days, and maybe even soybeans, but soybeans have a little bit lower to go. Regarding the cotton, I don't recommend trading it. Like I mentioned earlier when I was going over the best things to trade, stick with those things if you want to be a trader: gold, silver, crude oil, treasury bonds, and then finally you can pick a stock index like the NASDAQ or the S&P or the Dow Jones. And probably the Dow Jones is the least of the three, the least volatile. That's probably a good one to work with, especially if you're just learning to trade. Just stick with the wheat is also going to trade, and the margin is smaller, but not as good as the ones that we looked at earlier. And by far the currencies are easy to trade. Those are the ones that stay in trends for quite a while, and we're going to be really going to be looking at these things over the weekend when we do the letter, because we've got some real important numbers that have been hit here this week, and we could be looking on the verge of a big breakout in some of these precious metals, and then also even the treasury bonds could be looking at a rally that could possibly extend up to the 61% retracement, at the 160 level. We got to look at 155 first, but there's always that possibility because of the commercials in the business. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.